Assalamu alaikum. China trade surplus with US narrows to $36.77 billion in August. Beijing, China's trade surplus with the United States narrowed to $36.77 billion in August, from $41.5 billion in July, according to Reuters calculations based on customs data on Wednesday. Beijing, September 7th. China's exports and imports lost momentum in August with growth significantly missing forecasts as surging inflation, crippled overseas demand and fresh COVID curbs and heat waves disrupted output, reviving downside risks for the shaky economy. Exports rose 7.1% in August from a year earlier, slowing from an 18% gain in July and marking the first slowdown since April, official data showed on Wednesday, well below analysts' expectations for a 12.8% increase. It seems the export softness arrived in earlier than expected, as recent shipping data suggests that demand from the US and EU has already slowed as shipping prices have been falling significantly, said Zhou Hao, chief economist at Guotai Junan International. He expects pricing effects will continue to disrupt trade and said import growth in real terms had already turned negative since the late first quarter, suggesting more headwinds for demand. Responding to the disappointing data, China's yuan extended losses, losing 0.36% to 6.98 per dollar and approaching the psychologically crucial 7 mark. Despite languishing around 2-year lows, the weakening yuan has failed to give China's exports the competitive edge they need to make up for softening external demand. The slower growth is also in part due to unflattering comparisons with strong exports last year, but also worsened by more COVID restrictions as infections spiked and heat waves disrupted factory output in southwestern areas. Export Hubeiwu imposed a 3-day lockdown in early August to contain a COVID outbreak, disrupting local shipments and delivery of Christmas goods amid the peak season. Bucking the broader trend, auto exports remained robust in August, jumping 47% from a year earlier, according to Reuters calculations based on customs data. Weak domestic demand, weighed by the worst heat waves in decades, a property crisis and sluggish consumption, crippled imports. Inbound shipments rose just 0.3% in August from 2.3% in the month prior, well below a forecast 1.1% increase. Both imports and exports grew at their slowest pace in 4 months. China's imports of crude oil, iron ore and soybeans all fell, as the strict COVID curbs and extreme heat disrupted domestic output. Baking temperatures, however, led to the fastest increase in coal imports this year as power generators scrambled for additional fuel to meet surging electricity demand. This left a narrower trade surplus of $79.39 billion, compared with a record $101.26 billion surplus in July, marking the lowest since May when Shanghai was emerging from lockdowns. Chinese policymakers this week signaled a renewed sense of urgency to shore up the flagging economy, saying action was critical in the quarter as data points to a further loss of economic momentum. The central bank on Monday said it would cut the amount of foreign exchange reserves financial institutions must hold, a move aimed at slowing the yuan's recent declines. Courtesy Reuters.